Hey everybody, it's hwsteele. Today's March 31st, 2023, and I wanted to record a video today really quickly about something that happened to me or happened to the market today while I was trading. It didn't really necessarily happen specifically to me, but in the market. And the market I'm talking about is the E-mini S&P 500 futures, the June 2023 contract. Now, just as a heads up here, I'm recording this and I don't really have any time to edit it, so I'm just going to upload it as is. So if you hear some background noise, my apologies, but I have limited time today, but I did want to get this video out. So this is a 5-minute chart. Let me go ahead and zoom in here. And if you'll notice the price levels over here, we had a round number, 4,100. Let me go ahead and put a horizontal line there. Now, round numbers tend to, they do one of two things, and this is what I want to talk about for today's video. Round numbers will stop the market. There'll be support or resistance, like the market was moving up to it, and the round number stopped the market temporarily, but then the market went through. Sometimes that'll happen. Sometimes the market moves up and bounces off of it, or barely makes it and doesn't quite touch it and moves away from it like it did back here at 7:30 this morning. Now, what I wanted to point out to you is that the round numbers sometimes are the support and resistance. In other words, the market will move up like it did here. I entered a trade short, moving below here under because I was at the round number and I had a couple other indications. And then the market went against me, right? It broke through, came back, retraced down. I got out of my trade at an ever so slight loss, and then the market kept going. Now, when the market doesn't find support or resistance at these round numbers, the round numbers become balance points. So what we have here is we can anticipate how far the market's going to move past this round number just by looking at where it was below it. And of course, you would do the opposite if the market was coming down to a round number. So right here, this is the first significant bottom before the round number, moving up toward the round number. So you would anticipate that the market's going to move at least up to here. Many times it'll move, see the big swing comes all the way down here, and it's not a hugely volatile move right here. If it had been a really big strong move, then I would have been looking at one of these levels right here to balance this round number with. But because this was a relatively small moves here, I went ahead and just balanced it with here, anticipating that the market was going to get up to around the 41.22 level. And as we can see, that's pretty much what it did. So you reverse the trade right here, you go long, and it's going to go at least to that, double or balancing from this point right here. And when it passes this one, we would look for, this one's pretty close to that, so I would look for this one. But knowing that this is pretty low volatility, all things considered, I just went for this one right here. And it almost made it up there. Eventually, it made it significantly past that. But I just wanted to point that out to anyone who, I'm sure this works in other markets, but the S&P 500 futures contract was what I was trading today. So I wanted to show you this because a lot of people realize that the big round numbers like 4,100 or 4,000, those tend to be support and resistance number, but a lot of people don't realize that when the support or resistance is broken, the round numbers tend to be balance points. So all that to say that little bit of information. But anyway, hopefully you found the video helpful in some form or fashion, and I'll talk to you in next week's video.